Hey, good morning, everybody. Welcome to another Daily Mark Burt brought to you by Mike Bjork today's morning, and it's October 30th, the day after the Fed day. Uh, Today we got the weekly jobless claims. We'll start off with that data. And last week we had 284 people applying for unemployment. Forecast was dipped down to 281 and came in a little higher than expected at 287. So, but still kind of within the same range of the 280 and 290 range. So we still keep seeing that dwindling down, which is a good sign for employment. GDP, this is the first initial one for the third quarter, and the second quarter ended off at 4.6. And remember, we had that bad first quarter at a negative, so that could not. So a lot of that stuff got moved over to the second quarter. Forecast for the third quarter, however, was at 3.1, and the initial one exceeded that at 3.5%. Now there'll be three versions of it coming out. So this is the initial one. We'll have the second one coming out next month, and then the final version coming out in December. That will be our final report for the third quarter, and we'll have to kind of be anxious to see how that portrays. The stock market's a little mixed today. If you remember, yesterday we talked about having the Fed having the meeting late yesterday. It came out a bit hawkish, so the market's course kind of reflected that. Yesterday was the final. Did conclude the quantitative easing did conclude yesterday, but they did put some hawkish statements in there, which I think kind of surprised a lot of the investors, as a lot of them were expecting more of a dovish stance on a lot of things. So today, basically, everything's down, but the Dow is the only one that's up, and that's primarily because they like the some earnings reports that came out, most notably Visa. Bond market really didn't have much reaction either. Yesterday, it closed down about 3 basis points, so it closed out to 103. Yesterday, and right now it's up about 4, so we're up at about 103.14 right now. So we're slightly better pricing than where we left off yesterday, but if you look at from yesterday morning to this morning, it was about pretty comparable, as we started off at 103.13 yesterday. So again, we're kind of more of a sideways pattern. There's really not much price change in the market as of yet on the 3.5 coupon here. So, but going forward, I'd be expecting a lot more volatility, especially with investors after they, kind of digest the information what the Fed had spoken. They may have little concerns about, again, that topic might come up with the possibility of raising interest rates sooner than they expect, especially with the hawkish tones. So expect some volatility. That could play in favor of the bond market, which help out interest rates in the near term, which could create that extra volume since the Fed's no longer purchasing as part of the quantitative easing. All right, folks, you guys have a wonderful day. Thanks for watching. But interest rates, current home loan rates basically remain the same today. All right, have a wonderful day. Thanks for watching. We'll see you guys tomorrow.